two new rules to simplify your tax residency, or is it?
Hi everyone, I'm America Josh and welcome to Tax Residency with Jason Stock from Uptrend Advisory. G'day Jason, how are you?
Hi Josh, thank you. I'm doing very well, thanks. Thanks for inviting me to this session. I hope everything's been well with you.
Not too bad at all. It's sunny outside, so I really can't complain whatsoever. Jason, so I've certainly heard a bunch of people talking about this new tax residency rule that's been proposed by the Australian government, and I've had a whole bunch of frantic emails. So thank you very much for jumping on to quickly go through sort of what's been proposed and what might be changing in the tax residency space. I know it's an exciting one that everyone's always keeping an eye on. I want to flag this hasn't come in yet. So everything we talk about today, they're not changes that you need to worry about right now, but it is something that might come in. Jason, to start, do you know when, do we have any idea about when this might happen before we even get into the changes?
Yeah, so it is these new rules came out with the new budget, and so the assumption would be that they take effect from July if they do go through. Okay,
so at the very soonest it could be July this year, but realistically with the way that policies and things push through, it could be next year, it could be the year after. We don't know for sure, but it's something to be aware of right now so that people can get prepared. So in saying that, you and I have worked on a bit of a workflow that we're going to put on the screen right now so that people can track, because some of these things can get a little bit confusing. But I'm going to work through with you each of the steps, and we can jump right in. The first thing that I think we want to flag is this. When we talk about years, are we talking about financial years or are we talking about calendar years? Because I know, for example, in the US, you've got different rules than Australia.
Yeah, so it is based on the Australian financial year. I know everyone in America is now used to the calendar year, but we, for this exercise, need to go back into that June 30 year-end mindset.
Okay, awesome. So we're going to go to the very start of our workflow talking about entering the Australian tax system. So this is testing whether someone who isn't yet engaged in the Australian tax system or has is out of it, do they qualify to become a tax resident of Australia? So over to you. First question.
Yeah. So this is very similar to the substantial presence test in America, but it's essentially saying in the financial year, have you been in Australia physically for 183 days or more? And that will hopefully help the majority of everyone with their residency. But if yes, you're a tax resident of Australia. If no, then there are further underlying tests.
Okay, awesome. Easy. 183 days in the country, you're a tax resident. So if no, we get to the second one around, are you a government official working overseas?
Yeah. So think about Australians working at consulates and things like that. If that is you and you are a government official, you are still an Australian tax resident. If not, then we move on and yeah, it becomes a little bit more complicated.
So this is where we introduce some of the bits around I know people may have seen the brightline test. So that's sort of where we start to get into on this workflow. So the next one is, were you a tax resident in the previous financial year? And as we've got in our little workflow, we've got a yes, and that's around exiting the Australian tax system. So we're going to come back to that because we want to start with the first brightline test, which goes, so you say, were you a tax resident in the previous financial year? No. Did you spend more than 45 days in Australia this financial year?
Yeah. So this whole section of the workflow is targeting people who are not tax residents and want to make sure that they're still not tax residents. So under these proposed new rules, you've spent less than 183 days in the financial year. You were not a tax resident in the past financial year. You did not spend 45 days in Australia this financial year. You are not a tax resident of Australia. Again, you're fine. But if you did go on a holiday and you are stuck in Australia due to COVID or other things, then you need to apply these new factor tests. There are 4 factor tests, and you only need to meet 2 of them to be deemed a resident. Whereas if you do not meet 2 of them, you are still a non-resident. So these factor tests are the right to reside permanently in Australia. So if you're a citizen or a permanent resident, if you own Australian accommodation, such as an apartment or a house, if you have Australian family, and this means spouse, de facto, and children under 18, or if you have Australian economic interests. So the 2 that will most likely catch a lot of people is the accommodation and the economic interests. So the accommodation, if you own a house or an apartment and it is not rented out, then you satisfy that test. And if you're an Aussie citizen, then okay, you're now a tax resident.
That's 2.
Yep. Go for it.
No, so that's 2. I was saying that's 2. If you've got accommodation and if you've got the right to reside, so every citizen does, you've hit 2, you're a yes. You're suddenly, boom, a tax resident.
Yeah, whereas prior to these changes, you would not have been. The other one that will catch people is the economic interest. So if you have employment income from Australia, if you have, a business in Australia, a trust, or a lot of money sitting in bank accounts, that would qualify as economic interest. And so suddenly you're an Australian tax resident again because you met the 2 out of the 4 tests.
Yeah, and I think that's the one, certainly that you and I have talked about, that a lot of people, might have investments or might have, some money put away, or family trusts, or, all sorts of things and all sorts of reasons that might sort of be shown as tying you to Australia. So suddenly you're an Australian citizen, you've got some ties financially or economically to Australia, you're tick, and if you've spent 45 days there, which I think the real thing that's worrying a lot of people right now is around the 14 days quarantine, and if you have to go back to Australia and then you have trouble leaving because it's difficult to get flights and things, suddenly you hit 45 days, and you need to be aware of these, because suddenly, if these do pass, you'll suddenly become a tax resident and be hit by the ATO, basically.
And I'm hopeful, not to get political, but I'm hopeful that these proposed changes will be shared with people in the relevant space that can hopefully extend the 45 days, to 60 or 90 to make it a little bit more flexible with people in those situations. But you never know.
We don't know. Okay, so yeah, basically the proposed thing is around 45 days inside Australia physically, plus 2 of those tests, you become a tax resident. So then the second part of what was proposed is around this adhesive residency or sticky residency. And this is around people that, so if you are a resident in Australia, how do you shed your tax residency? So in the past, if you went overseas and you lived overseas for example, in the US, more than 183 days, you're no longer a tax resident. Whereas now, as I understand, they're making it a bit more difficult to get rid of that tax residency. Is that right?
Yes. So they've added something called the overseas employment rule, where, and in the bottom section of this workflow, we'll get into it, but you were an Australian tax resident in the past year. Yes. Okay. Now, in order to exit the Australian tax system, you need to apply the overseas employment rule. So what that rule is you've resided in Australia for all of the past 3 years. You now have overseas employment that will be more than 2 years, and you have accommodation the whole time for your overseas employment. The other piece is that you will be spending less than 45 days in Australia in each of those financial years you're overseas. If you can satisfy all of those tests, you have exited the Australian tax system on the date of departure. If not, then there's further tests to be applied.
Yeah, so for someone who does get a job for more than 2 years and moves overseas, and the whole point is to be overseas, forever and ever, conditions apply on immigration and things at the other end. But if that's the plan, then you are no longer a tax resident. So you do sort of shed that tax residency. But if you are, for example, on an E3 visa that might be less than 2 years or just under 2 years and you potentially are coming back, this is sort of looking like it's something around, those kinds of people who will potentially keep the tax residency. So if you say no to that one in our workflow, and then the question becomes, have you been a tax resident in Australia for less than 3 years? So if that's yes, that goes back to the 45-day test. We already discussed that one, so you can go down that merry path. But so just explain to us what happens if it's no. So this is someone who might have been a tax resident for much longer than 3 years, so an Australian who's now moving abroad.
So in that situation where they've been a tax resident for more than 3 years, but they couldn't pass all of the overseas employment tests of the prior one, then it's simply a matter of the 45 days in the last 2 financial years, in either of the 2 financial years. So if you have not spent 45 days in either of the last 2 financial years, then you have a clean exit. But if not, then you would still be an Australian tax resident.
Okay, so yeah. No, I mean, it really sounds like, so if someone's been living in Australia their whole life, paying taxes and been there the whole time, and now they're looking to move away for less than that 2 years, or less than 2 years with the job, you're going to be sort of, you're going to stay under the tax residency rules in Australia, and you're going to keep paying tax to the ATO. That's sort of the real crux of it.
Yes.
Yeah.
So overall, these rules are more restrictive than prior, and it does give some simplicity from the 183-day test, but all of these underlying tests do add some complexity to everyone's situation that should be carefully managed and planned so that you can avoid residency if possible. Obviously, if you're trying to enter residency, you at least now know how you can, but these rules are...
Yeah, potentially change a lot if they come through. So we'll certainly keep an eye on those, and we'll make sure that we're updating this page and updating videos if we hear that it actually comes out, and or if there are any revisions to that, I'll be sure to check in. Thank you, Jason Stock from Uptrend Advisory. I really appreciate you taking the time.
My pleasure. Thank you, Josh. This was fun.
Thanks, mate. Bye.